So hi, welcome to the first video. What I'm going to be talking about here is talking about looking to enter your trades, how to find potential trades, which trades to enter, some things you need to be thinking about when you see a stock or you see somebody call something out, things that you automatically need to know, like, hey, does it meet this, and this, these types of criteria? Does it meet this here? Does it fill all of these needs that would even make this a viable option to play? Just because someone calls it out doesn't mean, oh, okay, it's good. All right, I don't have to look at it. It's completely wrong, and that's why 99% of people end up in the red when they go off somebody else's call. It's just not the right way to do things. So we're going to talk about that. We're going to talk about scaling in and out. Definitely a good skill that I know I personally use, and I always preach it to people. Some people might not see the purpose in it, and that's fine. It's just I feel like it's a more conservative way to trade. With that, we're also going to talk about limit buys and stop losses. Um, Other than that, I'm just going to go over a few charts, a couple drawings that I've made the way that I look at a chart, and then that'll be it. And then I'll take any questions you guys have. Let's get to it. All right, so first, what I've been doing is I've been using a potential bottom scanner that I have, and as you see, it just brings up almost all green. You can change this. It'll be looking into more of the red side, ones that haven't quite bottomed out yet. Um, Really, you want to see all of those red ones, and keep a kind of a mental note of that. And then the next day, see if they're green, and then look at it, see if they're starting to reverse, things like that. So we're just going to go with a couple that I picked out of here that I drew onto. Um, the first one actually wasn't on this list, but it's one I've been watching. VKTX. Alright, so I drew some lines on here. It might just look like a lot of straight lines across it, but I'm going to try to break it down for you in the way that if someone brings up a ticker and I look at it, I immediately just start drawing these lines, whether it be mentally or actually drawing them out on the chart. So don't really need to draw a line for this low, because it says it right there. There are no other lows on a, I think, 5-day 5-minute. Yeah, 5-day 5-minute. There's nothing that steep, so we can just go with that. The next one is a resistance that you see, or I'm sorry, a support that you see. It comes down here, and then over here as well. It hits it quite a few times. So it's a common thing. That's where I want to draw a line. I know that, if it drops below this certain line, if it were playing there, then I know that this would be the downside risk. That's what I would consider it. And then we move up to the next one. Being that we're in hindsight, it's a lot easier to do this. If it was playing out over here, obviously you'd be kind of figuring out what channel it could come down to as far as your risk or reward, things like that. But we move up to here, and you see that it comes down and it touches this support right here quite a few times. So you know that if you're playing off this channel right here where the resistances were, that this would be your downside risk, and so on and so forth all the way up. And I really call that, I just kind of make lanes that they stay in. You can see that it comes up here, and it comes right back down into this, and it goes right back up and almost gets there. And that's just, I call that playing in a lane. And then it trades sideways for a while, and you see this big gap up into the next lane. When it's there, if I were looking at it, if it popped up on a scanner, I would know, that this was going to be my downside risk. Also, this here, once it broke through here, you know that the next place that it could go would be here. But really, it started riding that 180-day SMA. I use the 180-day when I'm looking at far out charts. I tighten it up a bit and use a 20 or a 50. Sometimes for day trading, I'll use a 9, just because you really want to kind of see where that band is going. This one's a lot looser since it's 180-day. And then you see it just kind of riding that line, and it breaks out right here, and it goes up into this channel. It breaks right through to that channel and right through to these next ones, extending away from this 180-day SMA. So really, when I'm looking at this, it's, in my opinion, it's already kind of too late to take a long position. Unless some big catalyst comes along. Because really what I'm going to be looking for is a pullback to the support, which usually I'm just going to call that the 180 SMA. I mean, that's the biggest support that I usually go off of at this point. So as you can see, that's pretty substantial downside risk to the tune of, almost over 40 cents. So that would be not not a good risk reward ratio, because you don't know unless you look out at like a 20-day or 180-day where the next support and resistance after this would be. After the high of 7, you don't know where that would be. So you can see here that now wouldn't be a very good time to enter this trade. Now, if you caught it over here and you were watching, you saw it trading sideways, and you saw these bigger red candles forming down. You see this bullish pattern coming. You see this, and you see this, and you see these green candles right after these red candles that close higher. Then you can see that it's gonna, more times than not, it's gonna gap. Well, not necessarily gap, but it's gonna trend back upwards. Now this would have been a great momentum play to catch right here, this bounce. But that's really what this scanner is set up for, is to be alerted when things start doing this, and then you can watch it go all the way down, and when it starts turning green on your scanner percentage wise, you know that it's starting to possibly confirm an uptrend, more so in the pattern of this direction than straight up. Both ways are good, but one with more risk than the other. So the next one I'm going to talk about is going to be, is it I? Yeah, I. Okay, so this one, a lot of trading sideways in this. So you can see down here the low, it came down. It gapped down pretty well down here. That would have hit our potential bottom scanner as well. So you see that down into after hours in the pre-market, and then as soon as the bell opened, it just gapped up right there. And then you see these big red candles. You see it blow back down. You see it forms this support right here. You see it comes back up. Now, if I were looking to get into this trade here, I would be looking for, let's get out of this. So I would be looking to see these green candles right here, and you see that it keeps bouncing, it keeps hitting this support about 2.5, and then eventually it starts creating higher lows, and then it goes up. Now, one thing that I really want to stress here is a lot of people will wait until it's up here to buy, until it starts kind of forming like this across, trading sideways at the top. Not always the best way to do it, unless historically you see that it's done that often, and a high percentage of the time it is actually worked out in your favor. But here you see comes up, touches this resistance here, which is a soft resistance. It's more so up into this area, but I drew it here because it correlated with a lot of the other places. You see it touches here, and it comes back down, and it looks like with these red candles that it wants to come down and try to test this support again, but it doesn't, so it goes back up. Now, one way that you could play that, if you really just were dying to play it, you could start doing what's called scaling in. So you see this kind of confirmation time right around here. You could start scaling in. If you've calculated that, from the low, which is 245, to the high of 265, 20 cents is a good reward for you. That's something that you want to do, and you know how many shares it's going to take you to get to your goal, your profit percentage. Then you can start putting in fractions of your position into it when you start seeing confirmations like this. So here, I see these trading sideways, and I see this next green candle close above these white dojis, and then I see this next green candle and this red candle next to it close above that. Then you could start scaling in, you could start adding position. So you could come in here at 254 and add a fourth or a third of your position, because then you're only risking a 10-cent downside or a 5 cents downside, depending on where you wanted to set your stop losses. And then once you see it Once you see it come up here, you could say, you know what, I'm just going to take my profit. I'm just going to cut because I think it's going to trade and it's going to come back down. I'm not going to make any money. Okay, that's fine. Burn a day trade. Take your 10 cents and then go about your day. Or you can hold it and see where it retraces back down to, starts trading sideways, starts coming back up. You see this here. Once it breaks this resistance right here, that's when you could go ahead and start throwing in another portion of your position, say another third or another fourth. So now you're halfway in. Yeah, it's it's 5 cents more per share than it was when you started, but still you haven't lost any money. So, and you're not all in with a possibility of 245 downside. So get in here, scale in here. So now you're halfway in. You see this. You see all these. You see it kind of come back down and test that that resistance at one point now just became the support. You see that. See it gaps up here during the morning, and it settles back down here. Once you see this trading sideways on this support, you know it's holding that support, then you can kind of see that with these green candles, maybe I want to go in, maybe I want to put one more third or one more fourth, so that way I'm 75% in, and I know that if it breaks this support right here at 2.6, then I could set my stop loss tight, 2.59, 2.58, whatever your risk tolerance is, so that way if it breaks this support, then it could definitely see a downside of 5-10 cents. So you want to play it safe. Your stop loss is here, you still made money. Your stop loss is here. If it's at 2.59, you still made money. If it's 2.6 right at the support, then you run a big risk of stopping out and then losing out on these potential gains. But nonetheless, that's profit. You were safe. So a win is a win. But regardless, say here you're 3/4 of the way in of your position that you've decided to take. You see some green you see a white doji and some green candles. You see these close above that green candle. That would be a good time to start really paying attention, because you don't want to lose it. You want to make sure that your stop losses are set right. At this point, once it's trading up here, you can move your stop losses up to 2.65, or I'm sorry, 2.63, to lock in that profit and minimize your risk of losing anything. As you can see, it doesn't go back down and touch that, so you wouldn't have stopped out. You would have been just fine. And then you wait for some confirmation here. You can see these green candles, this doji right here, this green candle here, may have been a decent time. I don't think I would have added it there. I would have been waiting to see, but as you can see, it gapped up right there and then played sideways and came back down. Now, you could take a risk here and see how close it gets back down to here. Wait for that green candle, throw in your last position, and then set your stop loss, right here, right, 264, 263, a couple cents below where you got in, and then just see if it goes up. Now, you could see from this right here that this was the high. This was probably right exactly where I would be wanting to get out if it ever came back up to there. So I would be watching, and I would see when it starts testing this level up here, the 269, 268, I would probably be setting some limit orders or limit sells, so I could be, starting to scale out, which is the same thing, just taking size off your position to maximize risk and minimize loss. So at this point, it gets up into 268, I start taking off my size of position. I start locking in profit. I scale out here. I get that filled. It moves up a little bit. It's kind of trying to figure out what it wants to do. You're gonna take out a position. It gets up here. It gets right into that range where you wanted to. Boom, you can go all out. And as you see, that's what a lot of people did. And then you see this gap down back to that support, which you still wouldn't have lost a substantial amount of money, but you wouldn't have made as much either, which is fine. But the way to play it could be very well managed risk-wise. And then you see it kind of bounce back up here, and it's playing sideways here. So, that's just one way to do it. It's, I think, one of the safest ways to do it, in my opinion. I hope I covered everything in this video well. If not, you can always feel free to message me. or another moderator, and if you need anything explained, if you can't get a hold of myself, these will be more videos to come like this. Definitely recommend creating your own strategy. It's all about what you feel comfortable doing. Hopefully nobody feels comfortable just taking positions based on someone's calls. Hopefully everybody's here to learn something or share the knowledge to help other people learn something, so we can all be proficient and all be self-sustaining when it comes to trading. So thank you, and good luck.